Imagine for a moment a world that feels just out of reach, but is quickly becoming reality. You wake up in your smart apartment, and when rent is due, you pay with stablecoins. At your favorite cafe, you tip your barista in XRP. Saving for your future? Your portfolio is a blend of tokenized assets, not just stocks and bonds. To some, this sounds like science fiction. But to others, it's an inevitable evolution, a future that's rapidly approaching. Which brings us to the real question at the heart of today's debate. Is crypto truly the future of money? Or are we witnessing a dazzling illusion, cleverly packaged and expertly marketed? As technology, finance, and society collide, understanding the truth behind the tokens and what it means for each of us has never been more important. Let's start at the root. Before we can predict the future of money, we need to ask, what is money really? For most, the word conjures images of bills, coins, maybe a digital balance on a phone. But money is more than just what's in your wallet. At its core, money is a social contract, a collective agreement about value, exchange, and trust. Through history, that contract has changed shape. The glint of gold coins, the crinkle of paper bills, the swipe of a card, the scan of a QR code. Each leap has been met with skepticism and curiosity. So now, as crypto wallets flash across screens and blockchain buzzwords become household terms, a new chapter is being written. Is crypto the next logical step, or just a detour? Why does crypto make sense to so many? It starts with decentralization. For the first time, value can be transferred around the globe without relying on banks, governments, or intermediaries. No middlemen, no closing hours, just pure peer-to-peer exchange validated by code, not by corporate policy. Imagine sending money to family overseas in seconds, not days, paying micro fees for services, or participating in a global marketplace where borders are simply lines on a map. Crypto brings privacy and sovereignty, control over your own funds, free from the silent erosion of inflation or the sudden freeze of a bank account. In regions where banking infrastructure is weak or non-existent, crypto opens doors. Financial inclusion becomes more than a slogan. It becomes a reality. But for all its promise, crypto's revolution isn't without shadows. The extreme volatility of crypto prices is legendary. Fortunes made and lost in minutes, market swings that would make Wall Street blush. Regulatory uncertainty adds another layer of risk. Rules that change, crackdowns that come overnight, leaving innovators and investors alike to wonder where the line is drawn. Then there are the darker corners, scams, rug pulls, FOMO traps that prey on hope and hype. For every legitimate project, there are dozens designed to separate you from your money. And while energy consumption has improved, the early days of crypto mining left a footprint that's hard to ignore. Yet, perhaps the biggest challenge isn't the technology, it's trust. Because for most people, crypto remains a black box, complex, jargon-filled, and intimidating. Is crypto the future of money, or just the future of speculation? Critics say it's little more than a casino where the house always wins. With all these doubts, why do some continue to believe? The answer may lie in the projects quietly building the infrastructure for tomorrow's financial world. Projects focused on real-world use cases, not just price charts. Consider XRP, a digital asset designed for instant cross-border payments. It's not just theory, it's being adopted by banks and financial institutions, backed by regulatory victories that have set it apart from the pack. Where traditional remittances take days and cost a fortune, XRP promises speed and efficiency. Then there's Hedera Hashgraph, or HBAR. It's not a blockchain, but a new form of distributed ledger, enterprise-grade, lightning-fast, and carbon-negative by design. For companies looking to build secure, scalable applications, Hedera offers a compelling foundation. SUI is another contender, a next-generation chain built for speed and developer flexibility. With fast finality and a focus on usability, it's gaining traction among those who want to build the apps and services of the future. And Stellar, or XLM, remains laser-focused on financial inclusion. Its low fees and micropayment capabilities mean it's already being used to connect people in underbanked regions to the global economy. These are not meme coins chasing viral trends. These are the rails, the protocols, the infrastructure that could quietly power a new financial revolution. If you've been watching the crypto space only through the lens of price movements and speculation, you're missing the bigger picture. The real transformation is happening at the level of systems, standards, and access. So where does that leave us? Is crypto the future of money? The truth is, crypto may not replace fiat currency overnight. Most people won't abandon dollars or euros at the drop of a hat. But make no mistake, the way we think about money, how we store it, move it, and use it, is already changing. Stablecoins are quietly powering decentralized finance, offering the stability of traditional money with the flexibility of crypto. Central banks are piloting their own digital currencies, CBDCs, bringing blockchain technology into the heart of the existing system. Tokenized assets are opening up new markets, allowing anyone with an internet connection to invest in opportunities once reserved for the few. The old system is being rewritten in real time. The question isn't if change is coming, it's whether you'll understand it before the shift is complete. So as you consider your next move, as an investor, a skeptic, or a curious observer, ask yourself, are you watching from the sidelines, or are you ready to engage with the future of money? If these ideas challenged your assumptions or sparked new questions, join the conversation. Share your thoughts, your doubts, your hopes for what comes next. Because the future isn't waiting, and neither should you.